on, guys? It's your boy Tyler, bringing you fundamental news on the 6th of April 2023 from Daily FX. US dollar gains on soft data that may signal a shift in market perception for the dollar. The US dollar rallied in a move that snapped recent intermarket relationships. Treasury yields went lower, reflecting the unfurling economic headwinds. Let me clarify something, guys. Treasury yields is just another word of saying government bonds and interest rates. So it means the same thing: bonds, interest rates. If the market response to data has shifted, what does it mean for the dollar index? The dollar ticked up overnight in a move that goes against the grain of recent price action. Treasury yields dipped again on soft US data, and equity markets also ground on the news. The data can be viewed here. The trend of late has seen bad news being interpreted as good news for equities, in hopes that it might lead to the Federal Reserve taking its foot off the tightening pedal. Treasury yields reflected this perspective of a less hawkish Fed to some degree, but the US dollar found some support. Recent trading sessions have typically seen the greenback loosely track Treasury yields up and down. I want you guys to listen to this statement again. Recent trading sessions have typically seen the greenback loosely track Treasury yields up and down. So what that means is when the 2-year Treasury yields go up, the US dollar index goes up. And what happens when the US dollar index goes up? Gold goes down and stocks go down. So now we have the opposite. US dollar is going down, gold is going up, and nasdaq is going up. Right. This disconnection might be saying about a broader shift in the response mechanisms for markets. There is a potential that FX markets might be returning to a more traditional view around bad news, boosting perceived safe haven currencies. The only currency to outperform the US dollar in its last session was the Japanese yen, a currency that is often interpreted by markets to outperform in tough economic conditions and underperform in times of economic expansion. This intermarket price action might be worth paying attention to for positioning in markets. US payrolls data on Friday might provide the impetus for significant market movement. The US dollar index technical analysis. The dollar index remains in a descending trend channel despite a rally yesterday. The price is below all period daily simple moving average, and this may suggest that bearish momentum is unfolding. Since the collapse of SBV Financial, the dollar index has been moving lower, and support might be at the recent low of 102.59, ahead of the prior lows of 199. On the top side, the triple top seen in the 105.63 and 105.88 area may provide a resistance zone. The previous peaks, 107.70 and 108, could offer resistance ahead of the breaks at 109.37 and 109.5. There you have it, guys. They are saying that the bond market is going down, and overnight the US dollar went higher, but I believe that is just a retracement. The dollar is going to continue to fall to about $100, where we're going to see, where we're going to decide if it's going to fall any further. If it falls lower than $100, then that's a historical low for me that we haven't seen in a while.